We have seen such a devastating blow to the global economy in 2020, and without recovering from the financial crisis in the first place, central banks couldn't do much. Governments pumped in stimulus from all corners. After all of this, the real engine of production has been weak, demand in many areas has been soft, and there is no actual solution to the problems at hand. So, helicopter money? You came here for the truth, so let me unveil that for you. This is what they provide. This is what they tell us, that all they need to do is more of the same. Even though it didn't work for the average person last time, we're going to apply the same thing again. And I believe that's the definition of insanity. But of course, that's the kind of topsy-turvy circus that we live in today. I'm going to get into some information. In fact, this video here is a continuation from what I had talked about in the previous video. I went on way too long. I wanted to make sure I included that info, so I will put it in this one here, that's for sure, because I got into it so much. So let's begin. This is the most important article for today. Student loan losses seen costing the US more than $400 billion. You remember that subprime crisis thing? Well, just check this out. Projected toxic debt approaches subprime mortgage losses incurred by lenders during the financial crisis. The student loans today are actually worse in some ways, because it is all interconnected to the derivatives and the debt that people are holding, and it is actually preventing so many other things from occurring. And the solution I have seen many times before has been to wipe off the debt. Let's take a look at this. The U.S. government stands to lose more than $400 billion from the federal student loan program, according to an internal analysis. It's approaching the size of losses incurred by banks during the subprime mortgage crisis. And of course, it wasn't just the amount of billions of dollars that were lost by these banks that were suffering during this time frame. It was the chain of events that took place. The Education Department, with the help of two private consultants, looked at $1.37 trillion in student loans held by the government at the start of the year. Their conclusions: borrowers will pay back $935 billion in principal and interest. That will leave taxpayers on the hook for $435 billion. That is unbelievable. Now, we don't know what's going to happen, of course, but it looks like you see the enrollments declining, you see the virtual quote-unquote learning that's taking place, and it's not good. It hasn't been good, and people are starting to reject it. That means this system is probably not looking like it's sustainable. The losses are far steeper than prior government projections, which typically measure how much of the portfolio will cost the government in the next decade. They thought it would be $31 billion, including the administration costs, and it looks like it's more than an order of magnitude larger here. After decades of no questions asked lending, and let me just interject right here for a moment. When we take out loans from anywhere, we're going to go to the bank, they want to see this paperwork that's all there. I want to see your driver's license. I want to see where you live. I want a bill. I want your income statement. I want a letter from your employer. I want your blood type. I want your shoe size. Everything. They want to know everything. And they also need to know how good your credit is. They want to know your existing borrowing. They want to see how much debt you currently have. But in this case here, doesn't it operate very differently? After decades of no questions asked lending, the government is realizing that it has a pile of toxic debt on its books. By comparison, private lenders lost $535 billion on subprime mortgages during the 2008 financial crisis. So we've got a major one on our hands, and I've got a feeling that now, considering what we're dealing with in 2020, this number here of 435 billion might actually be a lot worse. I will give you updates on this as I have it. Let's move on. Everybody's hoping for more stimulus, but check this out. Goldman Sachs. The longer Congress waits to pass further fiscal measures, the smaller the bill is likely to get. The outlook will restrain the amount of fiscal support Congress will want to provide. We now expect Congress to approve $700 billion versus $1 trillion previously. So they were talking about it being $2 trillion or more. Now it was $1 trillion and the potential for $700 billion. The markets will not like that, and neither will the people. Fed's Bostic, when households burn through their savings, will signal a tipping point requiring more Fed engagement. That doesn't even make sense to me because when you look at what the official mandate of the Federal Reserve is, you've got quote unquote full employment or maximum employment and price stability. What is the Federal Reserve buying mortgage-backed securities going to do for the average person? It's ridiculous, but this is what they tell you. M1 money supply increased by a further $100 billion in the week between November 2nd and 9th. Take a look at this chart here over the years 2015 into 2020, and just look how shocking. I mean, it was going up at a tremendous scale to begin with over these years, but throughout this period, and still to this day, it's going up and up and up. The amount of money that's been sloshing around there has been crazy, but where has the average person been? I mean, a lot of people are left with, if they're lucky, if they're employed, many of them have had their hours cut, their salaries cut, and the unemployment numbers just don't do justice to what's actually going on. I found this article here out of the Daily Mail. It's talking about the food bank lines all across the United States. You can see different videos, different pictures, just to see that it's not in one place, okay? We are noticing this everywhere. Thousands and thousands and thousands of cars are in lineups, and it looks a lot like what we had basically a century ago. I thought this was an interesting piece. I wanted to touch on it really quickly. The Wall Street Journal. Retailers cut back on choices. Quote, we don't need three types of red. Bed Bath & Beyond, Kohl's, and others cull styles to combat decision paralysis and unclog the supply chains and reduce end-of-season markdowns. These retailers are hurting big time, and they're trying to do things they never would have had to before. I just thought it was interesting, wanted to bring it to you. This article here is talking about the real estate market in LA and how it is hot, very hot. And you can actually see a chart that's down below this area, and it shows you that certain areas had actually gone 100% or greater sales year over year. And that just shows you how intense this has been. It shows you in this article the things that I talk about all the time, the low interest rates, people right now, quote, houses are affordable right now and people want to get out of their cramped apartments. And that's only because the 1%, really the 0.1 or the 0.001, these people have more money than ever before. And as a result, they're able to purchase. They mention how there's people that are somehow involved around tech have been doing well. The average person, however, doesn't seem to actually be doing well. And I could show you those numbers over and over and over again, whether it's coming from different government agencies. I think the SSA had some data around that, and the median wage, and how it really isn't good for the prospects here in the near future. I showed you this article a little while ago about this robot dog from Boston Dynamics. Ford is experimenting with it. Take a look at this. Boston Dynamics dog robot Spot learns new tricks on the BP oil rig. So they brought this dog along and apparently trying to do other things. I watched a little clip that they had there, and he kind of just walks around. I'm not sure exactly what they are capable of doing at this point, but supposedly doing checks here and there. I just found it interesting that they're implementing these robots on such a massive scale before, seemingly, at least from the outside, they seem ready. And then we have this. Robots invade the construction site. Boosted by advances in sensors and artificial intelligence, a new generation of machines is automating a tech-averse industry. And this here is actually showing you what he's doing with the drywalling. And, they're able to make this happen supposedly and do it very well. I don't know if that's the case. I don't know how soon this kind of thing is going to be rolled out, but we know that businesses are definitely heading in this direction. Swiss watch exports on track for the biggest decline in 80 years. I mean, that is huge. There is no telling how deep the recession can be in certain countries when you look at it, and it just gives you an idea of how fragile the economy, the global economy, and the interchange between countries really is. There has been this talk constantly about we don't need other countries, we can do everything on our own. But look, the integration is far beyond what you see on TV with the suits and ties and what they tell you. This is imperative that countries work together on some level. They don't need to have these trade agreements that are put in place that actually make it worse for most of the countries in so many ways. You look at what had happened with NAFTA, for instance. You look at these other agreements, and it's just, basically special interests that get to gain, and then the public of all of the countries involved are losing out. That's the way it is. It's not as if one country wins. No. It's special interests, okay? Looking at all of this, I just see the weakness that is here, and it doesn't surprise me, to say the least, not necessarily with the Swiss watch exports, but just in general. Luxury markets have been hit in certain cases, but everything beyond that is just incredibly hurt at this time. There's no doubt about it. The growth hadn't been there for a period, and as a result, you get the job cuts, you get the weakness with the businesses and the revenue, and so on. Argentina, check this out. Lower house opens debate on government's wealth tax bill. Argentina's lower house is expected to approve a bill to introduce a one-off capital levy on more than 9,000 of the country's wealthiest citizens. So what do you think they're going to do? Well, I'm pretty sure a lot of these people are going to be moving their money out, maybe to Uruguay or other places completely outside of that. It would not surprise me at all. And they've probably already done this anyway, but it just shows you that when a government is hurt, what do? They tax. And I'm going to do a video if I can. I'm telling you right now, I'm going to do this video. It was related to a former biz central banker, okay? The Bank for International Settlements banker. And this guy had some interesting things to say about basically everything I talk about here on this channel. And it's completely on the same level. Now, he's a central banker, and of course, he likes the central banks, but what he was talking about, especially when it comes to taxation, he said, expect more taxes. Expect the governments to do more of what they have been doing, the QE, the lower interest rates, even though it doesn't work. That's how crazy this is today. This is the point I wanted to make. Net wealth tax revenue. Look at this. Norway, Spain, Switzerland. These places have wealth taxes. But when you see them and the actual share of the total tax revenue, it's non-existent. It's non-existent. Switzerland, the highest one on the list, 3.6%. That's it. That's it. You taxed all these rich people and you got 3.6%. Well, it just shows you that they are incapable of doing anything, but it satisfies the public, and that's the point. Really quickly, want to go through these, just talking about the stock market and what's been happening. Most sectors carry extremely low short interest today. It doesn't matter where you look around, there's basically nobody left that's shorting the market. It's higher in energy, for instance, than information, technology, that's for sure, but it doesn't matter. We're talking about very, very small amounts, and it just shows you how long investors are today. Speaking of which, you can look at this on the left-hand side, the 2020 year-to-date performance. The NASDAQ, incredible rise, 37%. Look on the right-hand side. The most popular long positions have performed extremely well this year. It does not surprise me. I know it doesn't surprise you either. Just looking at it all, it has been truly extreme. The EPFR published this data, and you're looking at the weekly gold fund flows, the largest outflow from gold ever. And that should be a telltale sign of where these institutional investors are moving their money. Remember, this has nothing to do with physical metals. We're talking about the paper here. And looking at this, it is just incredible because the price has gone up. I think it said 18% this year or so. And you can see how this has really changed rapidly because of the investor sentiment. Now, they are trying to put their money into other places. They are apparently not worried about anything today. So it's just interesting how things can change so rapidly. JP Morgan believes that the first quarter of 2021, there will be a minus 1% GDP. We'll see what actually happens. They somehow claim that fourth quarter will be 2.8%. So I really don't know. But hey, that's what they say. Wanted to bring it to you. And to finish it off, the number of 401k millionaires hit a new high despite millions left behind by the crisis of 2020. So this is what happens, and we get this every time there's a bull market. There's a whole bunch of new people that are becoming what they call 401k millionaires, and it changes very fast. So a lot of this is due to how much people are taking from their paychecks and they reinvest. If they get dividends, that money is reinvested. So it's constantly being reinvested, and they just don't know when to sell. They just don't know what to do with it. So it's always being reinvested. So the pile gets bigger and bigger, and then when there's a crisis, that gets taken out. So I don't have any comments to make related to it. I just wanted to bring it to you and show you the current status of this situation. I'm going to end the video there. If you found it informative, hit that thumbs up button. When you do, you are supporting me. Thank you for that. If you want to learn how to sell stuff online, if you want to know this from scratch, A to Z, it's all in here for free, the AmazonGPS.com. I know this information can be complex, it's difficult to understand, and you don't know how to utilize it sometimes, but in these two books, I explain everything. You will get all those details, and you can actually flip through the pages for yourself. If you look down in the link in the description, you will see that. If you want the audiobook instead, themoneygps.com. Hold on, wait a second. Have you watched part 1 of this video? If you have not, definitely want to do so. Click it. I'll see you there.